one of their targets, Joe, is to, grow their asset management business, which is the very reason why you're bullish on Morgan Stanley over Goldman Sachs.
Well,
I mean, that's the stock you choose in the group.
Of course, and I've wanted for years. Everyone wants the asset management. Everyone wants the wealth management business right now. It's so incredibly important. You're seeing a lot of the big players going out and purchasing some larger IRAs. So I want there to be a bigger presence on the part of Goldman Sachs, but there isn't right now. And there is in the case of Morgan Stanley. They've done the right thing, Morgan Stanley. Eaton Vance, E-Trade. Two fantastic acquisitions. It's benefiting them now. And quite candidly, the reason I'm in Bank of America is for Merrill Lynch. Without Merrill Lynch, where would Bank of America be? I think it would be in the same position as Citi.
Okay, so Liz Young, how do you view this space? Do you like the financials as, again, we wrap up February and we go into a new month?
Well, so a couple things. First of all, the asset management business, if you look at asset management and the consumer business, and also it's not lost on me that I sit here representing a very consumer-facing bank, right? If you look at asset management, there was likely to be consolidation in the space as ETFs took over, passive management took over. There was so much compression in fees. It's difficult to get that space right and still make money. On the consumer side of things, there's been such a proliferation of fintech. Competition is fierce. Also very hard to make money in that space, and this competition over deposits that's going to take place probably for the next year or so until rates actually come down. That being said, I think you do have to separate financials and banks and look at them in different ways. So if you look at just the financial sector overall, still the second cheapest in the index, and I think valuations matter. If you take Berkshire Hathaway out of there, even cheaper, right? Banks, on the other hand, even cheaper than the financial sector broadly. So seems like a good entry point. I would caution people that this is a time frame issue, too, though. If what I think is going to happen and the consumer kind of hits the skids, banks are probably also going to hit the skids. However, that's the entry point. So if we see some stress in financials, in banks, I think that financials and other sectors like materials, industrials are what probably lead us back out of this, because as we know, the sectors that lead you into a peak in the market are rarely the ones that lead you out of a trough.
Well, sometimes first in is first out. But I'm wondering, Joe, how you think about, it's beyond the consumer, just about the economy in general, if we have a recession or not. As long as you have those questions hanging over bank stocks, what does it mean? Because if you have in the back of your mind to be worried about credit risks, should something get dislocated, you know where I'm going.
So I'm more concerned with the S&P just sitting here and continuing to wrestle with 4,000, because for Morgan Stanley, for Goldman Sachs, and even in the case of Bank of America, JP Morgan, and Citi, trading revenue has been resilient, surprisingly strong at times in 2022, and that's supported the valuation. If we're going to be in an environment where we're really consolidating for the S&P, I'm concerned having ownership of Morgan Stanley, looking potentially at some point to purchase Goldman Sachs, and having the other three banks under consideration.